Hey everyone, Couch Investor here with another Lemonade video for you guys. In this video, we're going to talk about the earnings report. We're going to go over the graphs and then answer some important questions I think a lot of you have been asking me lately, like the price, where am I buying, am I going to sell, what's going to happen with Lemonade, why is it going down every time, etc. So stay tuned for that. If you haven't subscribed to this channel yet, maybe hit that subscribe button. And if you like these videos, maybe leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there to you guys. So without further ado, let's dive into this. Alright, so before I get into the numbers part, I just want to say that you don't need to panic. I actually bought more Lemonade stock since my last couple of videos. I will be holding Lemonade for a long time because I think they are just starting to get traction in the insurance market, and their policies will just keep on adding and adding value to the whole company as a whole. Now, I just want to put out a quote by Steve Jobs that might be relatable to what Lemonade is doing and why I think most of the people that don't understand what Lemonade is doing, this should maybe explain it. So a lot of times people don't know what they want until you show it to them. So most of us have probably heard this from the iPhone presentation, etc. Before the iPhone, we didn't really need a smartphone, but when they showed it to us, everybody wanted a piece of it. Now for Lemonade, some of you have raised the point of saying not everybody wants insurance, not everybody is actually looking to buy insurance. Well, actually, a lot of us need insurance. You might not have it right now, but eventually you will need car insurance, life insurance, house insurance, etc. And Lemonade offering that service much better, faster, and cheaper than other industries might actually lead you to get insurance even if you didn't want to get insurance in the first place. That's just one of the small points I wanted to point out, because I've seen a lot of people ask me this question that, well, insurance is not something people go out and buy. Well, you might be right, but maybe now that Lemonade is digitalizing this whole insurance process, maybe people will start thinking about insurance in another way. Now let's go and look at the graphs. All right, so looking at the charts real quick, we can see that yesterday the stock opened pretty low after earnings report, around $57 or so, but then eventually made its way up intraday trading to almost $64. But it closed the day at around about $60 or so. But today is good to see that we can actually maybe bounce off this support area right here around $60. I might even put that support line right around here. This was just in case the stock went down to 55, where I have a buy order from a couple of weeks or so ago. Now what I would like to see is the stock continuing this uptrend and maybe look to break out of this $70 mark, where it already tried to break right here. So if we can continue this way up the next couple of days, that would be great. But overall, if we can create a solid base between $60 and $70, a breakout will be made in the near future, and I think we can continue the uptrend to the prices we were at before, at the $80 marks or more. Now, before I get into the shareholders letter, here's a little paragraph for the introduction by the CEO, basically explaining how Lemonade actually exceeded expectations from Q2. With millions of people fired and furloughed and billions in lockdown, Lemonade entered Q2 on a defensive footing. At the start of the quarter, we significantly slowed our marketing spend, suspended non-essential hiring, and offered to defer customers' payments. Then we braced for impact. We expected to see a spike in churn, a drop in demand, and a hit to our cash flow. None materialized. Less than 1% of our customers opted to defer their payments, while retention rates, click-through rates, and conversion rates all held steadily. Like I said, most of the times there are a lot of bears out there that are just saying negative things about this stock because they don't understand the growth that this stock is experiencing. If they can grow that much during a pandemic, during a time that even they expected slower growth, who knows what will happen when we get a normal quarter in the near future. Now let's look at the actual earnings report. All right, so looking at the shareholders letters right here, we can see that customers have been increasing year over year 84% to 814,160. Premium per customer of $190 is up 17% year over year, primarily due to a continued shift of product mix towards higher value homeowner policies. Actually, Lemonade admittedly needs zero incremental spending to get renters to switch to a homeowners policy carrying 6 times the premium, which is pure margin expansion. Then second quarter gross earned premium of $35.3 million increased $19.3 million, aka a 121% year-over-year growth. Gross loss ratio has been improving as well at a crazy rate. We can see here 2 years ago they were at 146%, now they're at 67%, well below the industry mean of 82%. Second quarter total revenue of $29.9 million increased $16.1 million or 117% as compared to the second quarter of just a year ago. Now lastly, regarding their AI and actually customer support, etc., our customers' experience was likewise unaffected by the turmoil, as our bots AI Maya and Jim chat with customers wherever they may be without triggering concerns about social distancing. Back in 2018, actually, the AI handled only 6% of the claims, and today that number is at over 32%, and it's climbing year over year. Now, one of the reasons why the market actually acted so harshly is because guidance wasn't as good as expected. For Q3, the revenue is expected to be between 14 and 15 million. The estimation were 15.2 million, so that's why the market acted so harshly. And for the full year revenue, it's now between 86 and 88 million dollars, coming short to the consensus of $88.9 million. So we can see that the market is actually reacting very harshly because of this 0.2 million miss and a 0.9 yearly revenue miss. Now, the major reason why guidance for Q3 has been reduced is the following. Q3 is historically a moving season and has typically been our strongest growth quarter as many people move in time for the new school year. The pandemic has got school openings in question, and we don't know how this may change the migratory patterns of Americans. Our guidance and planning assume that some of the historical seasonal patterns will persist, but that the impact may be less pronounced or more gradual as compared to prior years. Alright, so to conclude, earnings were pretty good. Guidance might have been better, but that's maybe so that the bar is lower and they could beat expectations for Q3. You never know, some companies do that to ease the pressure on the company and the stock. So we might see the stock rise for Q3 earnings if they manage to beat that. As for the stock price right now, it's probably at $60 or maybe 61, 62 when the market will open. If the stock price stays at that $60 to $70 mark for a short term, that would create a perfect base for a breakout towards the $80 mark or so in the near future. But overall, I'm extremely bullish on Lemonade. I tend to keep this stock for the next 5 to 10 years because I think it's still very early in their product cycle and in their business cycle as well. So that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed yet, maybe hit that subscribe button. I will keep on following Lemonade each month or each time there is huge news coming out. So stay tuned for that as well. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.